Hey, welcome back. I've decided to make a short video explaining, on the one hand, with crypto and Bitcoin, but on the other, we are starting to see the emergence of the agentic AI. And also, there's a lot of other pieces in between, right? We're hearing a lot of things about crypto regulations that are starting to spring up, and a lot of momentum and institutional adoption and drive for these technologies in the digital economy. So this is very important because it's trying to find other ways in order to create intergenerational wealth, so that when we're no longer here, we can pass that on to our next of kin. So let's talk about a little bit around crypto and Bitcoin, where we are seeing Bitcoin, and I think it's unanimous, as a digital capital in order to use it as store of value to generate that capital and wealth in the long term, so we can pass it down to our next of kin, and also to enjoy it, some of those gains, when we reach, let's say, the age of retirement. Okay, so that is digital capital. And then we're starting to see within the broader crypto mix the emergence of real world assets. So these are like utility tokens that are starting to have some value in the mainstream, both from an institutional but also from a retail investment perspective. So things like how we can tokenize physical analog wealth, whether it's premium real estate or equities and stocks, or even our basketball team, football teams, from a branding perspective. All of that, as long as it has an economic value attached to those analog assets, that can be represented perfectly on the blockchain. That is what I call real world assets that ultimately have that utility value, right? So that is the dichotomy, or if you like, the makeup of the crypto industry. We've got digital capital, which is Bitcoin, and the rest of the real world assets that have a utility value on the blockchain. But then there's another type of technology that we are seeing an awful lot, and it's AI, artificial intelligence, and how these agents, now they're calling it agentic AIs. This is nothing more than autonomous robot agents, if you like, that are starting to automate monotonous tasks, whether it's how we improve the way we run our own finances, or how we actually improve our day-to-day tasks, like setting up a diary online, or how we actually perform our reconciliation. Let's say we want to reconcile our expenses at the end of the month versus the paycheck that we get, right? That can be dealt with perfectly autonomously via these agentic AI. But based on the recent interview that I've seen with Michael Saylor at the Squawk Box CNBC, he's mentioned that agentic AI could also be used to perform transactions on the blockchain on our own behalf, without us actually having to do it ourselves, which could be slow, timely, and even expensive. Well, if we deploy and schedule these autonomous agents to perform those blockchain transactions, so let's say you want to buy the next fraction of a Bitcoin at a certain price at a certain time of day, well, you can perfectly schedule that through these autonomous AI agents. And not just with Bitcoin, in fairness, the same can be argued for other digital assets on the blockchain. Clearly, there is that dichotomy on crypto and Bitcoin on the one hand, and using and deploying these AI agents to be able to transact on our behalf on the blockchain without us doing it. And that is really, in essence, where the wind is blowing. Ultimately, that is where we could see ourselves in that situation. Maybe not now, even though the technology is there. This is going to be so prevalent in our kids' generation when we're no longer here. Well, there's certainly going to be seeing that happening in their day-to-day, right? But if we add in addition to that piece, the crypto, Bitcoin, and AI, there's also increasing clarity around crypto and even AI regulations across the world, right? And which will certainly add that momentum push to support these fundamental technology disruptions, AI, crypto, and Bitcoin, even further. Because where there is clarity, where there is that predictability, then that's going to be the ultimate driving force for more increased capital inflows by the fintech players, and the governments actually establish these regulatory rails to support the fintech players who are going to be driving these technologies, well, that is actually so important within which they can operate, whether it's from a crypto, Bitcoin, or even indeed from an AI standpoint, right? So this is so fundamental, and we are starting to see, given the, let's say, the US administration, and I'm not talking about whether you're a fan of Trump or not, I'm just talking about based on the actions that I'm seeing coming out of that administration. It's fair to say they are pro-crypto, pro-AI, so we have to give them some credit where it's due. And similarly, we are starting to see that copycatting of that pro-crypto, pro-AI part of the government agenda by other nation states. With this regulatory regime that's going to be established as the base layer, and then the AI, the crypto and the Bitcoin on top of that, well, clearly this is the ultimate signal that we should certainly take seriously whenever we want to invest in these type of growth industries, AI, crypto and Bitcoin, which is ultimately what I want to leave you today in this episode. If you don't do it for yourself, you should certainly do it for your next of kin, because when we're no longer here, they're not going to be interested at all in inheriting, let's say, the brick and mortar assets, whether it's our real estate or other type of physical analog wealth, where they're susceptible to hefty taxation and upkeep and maintenance, right? That's the point, and that is the expectation from our Gen Zs and the millennials and all the rest of it, right? So they're not going to be interested at all about inheriting the 20th century style wealth. They're going to be interested in inheriting, ultimately, digital asset wealth, right? And for that, we need to get our hands dirty and start doing that research and invest slowly in small amounts into those coin projects that you're highly passionate about and you have a long time horizon and see into the long term. For me, as a minimum, I can only advise investing part of your wealth into Bitcoin, in addition to AI equities, stocks, and some 1 or 2 or 3 top real world asset coin projects that have certain amount of adoption, high level of TVL locked, so a high amount of capital invested in those coin projects, and where there's a lot of news and developments talking about it every so often. That is the 3-point criteria that I use whenever I set up and record my midweek special and Friday Desk Review videos, right? That's the minimum criteria that I use. And also you need to learning about how to use your self-custody, the actual cold wallet storage devices like Trezor or your NanoX devices whenever you want to store your digital asset wealth off the crypto exchanges, which is ultimately how I'm doing it. But with that, you need to learn yourself and keep yourself abreast of what are the latest scam techniques that you need to avoid and just to be aware of, right? Because you need to cut yourself from that. Also learn about the simple security protection mechanisms that you can employ whenever you use these devices, right? Like setting up a strong seed phrases, how to store that in a confidential means. And please don't write it down on a piece of paper and keep it in the shelf somewhere in your house, right? Those are the sort of things that I'm talking about. They're very simple things, simple mechanisms that you can employ now and just get your head around and doing it yourself. And finally, the last point is, given all of the above, why we are doing it. Why am I doing it? What I'm trying to say is, I'm almost 50 years old and I need to think about my next of kin and how to have more of a sovereign control over my digital wealth. But with that comes with responsibility, keep learning and do the right thing, because ultimately I'm doing it in order to generate that intergenerational wealth ambition that I have. So when I'm no longer here, my children can inherit that wealth, because it goes back to my high-rated conviction of the perspectives around AI, crypto and Bitcoin in the long term. I'm super confident that it's going to be so bullish and it's going to be 10x, 100x, 1000x. I couldn't care less. But that is certainly what is going to end up, maybe not now, but minimum 10, 20 years from now, right? I'm not in a rush to start using my fiat wealth where I know it's easily debased, where I know it's easily reproducible through the money printing machines from the various governments out there, right? So that is the bottom line of this video. Do the right thing, do your education, do your research, get your hands dirty in learning a little bit about crypto, Bitcoin and AI, invest into those areas, as best you can, right? I'm not saying you should be super crazy and go all in on Bitcoin or all in crypto or all in AI. You have to do a certain amount of calibration exercise to realize how much of your fiat wealth you can invest into these areas. And importantly, stick to the long term. There's always going to be volatility, those peaks and troughs along the way. This is nothing different in terms of how our other TradeFi wealth operates. Because volatility at the end of the day is not a risk. It's what breeds vitality in yielding those returns in the long term. That's all I have for you for today. If you value clarity on Bitcoin, blockchain technology, and real-world assets tokenization, stay alert. Subscribe and enable all notifications to stay ahead of the curve. Share this episode with those who need to understand what's coming, friends, family, and colleagues. This channel aims to deliver insight, no noise, and no hype. Subscribe now.